Vandana Hari joining us this morning. Vandana, we've got Brent back on track, hitting $50 a barrel. That's the first time we're seeing this since March. Crude also up about 2.8% now and soaring over 4% amid all that vaccine optimism. Tell us more. I mean, what do you feel that there's going to be a different trajectory now on those oil prices?
Good morning, Aisha, and thank you for having me on your show. I think you just said the watchword. It's vaccines, basically. What we have seen pretty much since the Pfizer announcement on the 9th of November has now turned into a snowballing optimism, at least as far as the oil complex is concerned. You've had a string of course, vaccine trial successes, but more importantly after that, I think the speed at which regulators of various countries have begun to approve those vaccines, and not to forget the actual rollout of those vaccines amongst the general population, with UK blazing the trail starting on Tuesday. So all of this clearly is very positive for the oil complex. It bodes well for economic recovery. Most of the world, which is the worst hit right now with the second and third waves of the virus, is also, this is the OECD, the developed world, are also the countries which are first in line to approve and roll out the vaccine. So all of that looks good. Having said that, however, yesterday's rally and continuing this morning has caught a lot of industry participants by surprise. I would say a few are skeptical as well of this rally, continuing to have legs.
A couple of other factors that could aid it. We're also watching out for the US stimulus package. That could also aid a rebound in demand, but we're not seeing any closure on that as we near the year end. There's still a stalemate, and it looks unlikely that we'll actually see some resolution or some relief on that front as soon as that. So, is that something that could also provide a fillip? Because on one hand, while there may be good news, we also need demand on ground to see that actual recovery.
Absolutely. There are quite a few concerning factors and worries on the horizon. As you've just mentioned, the U.S. stimulus is once again in a stalemate. I don't think it should surprise anyone. We saw this whole drama unfold quite a bit through August, September, October, November. Basically, the Republicans and Democrats being quite far apart on how much to spend and on the details of the package as to where to spend that money. So, nobody at this point is really holding out hope that the stimulus package, even though it has been trimmed down considerably from the $2 trillion that the Democrats wanted, but nobody's really holding out hope that it will go through. So that is definitely a bearish factor for the market. In the meantime, the U.S. doesn't have strict lockdowns like the ones we've seen in parts of Asia and we've seen in major European economies, but nonetheless, U.S. states have also been imposing restrictions in the face of the surge in COVID. And, last night, figures from the U.S. Data showed the U.S. joblessness rate, hit 2-month highs last week. So definitely a major concern. There are also concerns in terms of the actual rollout of the vaccine. It's uncharted territory. There are, of course, going to be hurdles and challenges in terms of broad distribution of manufacturing and distribution of vaccines. So I would say a lot of concerning factors. But what's happening really with oil is I think the market is getting too fixated on the brighter picture, let's call it 6 to 9 months down the line, and sort of right now ignoring the current ground realities, which continue to be grim. And that's why this sort of tussle between the bulls and people who remain a bit skeptical of the latest rally.
Have you on the show. Thank you so much for taking the time out and speaking with us today.